or 99.9% of the people out there in the investment world have no idea that we are in a hyperinflation. And granted, we might have a deflationary scare, and by that I mean a market crash, a recession, but you can bet the central bankers are not going to let that linger for too long. They're going to throw the kitchen sink at it, and people are going to realize that Saturday, August 30th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, yes, gold and silver and the miners did very well yesterday. They took off. We've broken some key technical levels. We're going to look at that. But my message today is probably one of the most important ones I've ever made in almost 10 years of posting videos, and that's that we are in a hyperinflation. Yes, we are in a hyperinflation, albeit just in the beginnings of it. But I've been warning, of course, for many years. I have a hyperinflation playlist. I'm going to put it up here in the cards. You can go through all the material I posted there. And yeah, there are many factors that trigger hyperinflation, like symptoms that we can look at as well. The fundamentals that create hyperinflation. We're going to quickly look into that. But before we do, I just wanted to give a shout out to one of our great affiliates. We've been affiliated with them for a few years now, Dirty Man Safe. So with Dirty Man Safe, you can hide, you can secure, retrieve your valuables with ease. And yeah, they've got different sizes now, small, medium, and large. And they've got a brand new website, a great website with all the information you need to decide whether you think it's important for you to keep your valuables safe. I personally think it is, especially in these chaotic, not just political, but economic, geopolitical, and social times, pretty much like it was back in the early 20s in Weimar, Germany. And yeah, so there's a link below in the description. There's a landing page that you can click on and go through there. You get 10% off as well if you use my landing page for Dirty Man Safe. So back to hyperinflation or currency collapse, because that's what it is. And yes, it does sound extreme and it does sound chaotic, and it is chaotic because it's not just your run-of-the-mill inflation that we've seen lately of 2%, 3%, 4%, sometimes even more in the last few years. No, this is completely different. It's got nothing to do with supply and demand of goods and services, cost-push inflation, or even tariffs. It's got everything to do with the confidence, loss of faith and confidence in the state. And why does that matter? Well, because it's the state along with the central bank that issue the currency. So if you have no faith and confidence in the state anymore, you're going to have no faith and confidence in the currency. And when that happens, you want to get rid of that currency for anything that has some real values, anything that is tangible, or it could be an intangible, like technology, of course. But yes, most likely it's something that's useful, something that will help you survive, and something that holds value over a long period of time. And that's why gold and silver have done well in a hyperinflation. But I want to read what Ludwig von Mises says about, well, he calls it the crack-up boom or yeah, you can call it the flight towards hard assets as well. In German is Flucht nach die Schwachwerte or something like that. You can correct me if you speak German. But yes, this is from his kind of Bible, the book called Human Action. And I took it from page 428. And I've been talking about this for years. And I still have here, it says, cracker, boom, are we there yet? So I think we are there right now. And so we're going to read through what von Mises says about it. So I quote, "But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs, the crack-up boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper." I put it in parentheses, scrap digital entries as well. Nobody wants to give them anything. Nobody wants to give anything away against them. It was this that happened with the continental currency in America in 1781, with the French mandat territorial in 1796, and with the German mark in 1923. It will happen again when the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. So there you go. People will wake up. I guess I've been awake for like 20 years or more, actually. I woke up when Ben Bernanke made his helicopter speech back in November 2002. I had just started looking into gold. I had just started buying gold. And I thought, this guy is going to become the chairman of the Fed. And he's talking like John Law, like print money. It's a great technology. We can beat deflation by just printing money out of thin air. And I thought, this guy's crazy. And at the time, he wasn't chairman, but he was being groomed to be chairman. So I knew that this was going to happen. And I've been warning, of course, on this channel since 2015. And yes, a lot of times it sounded like I was wacky and crazy, but I think we are there now. Will it take a few weeks only or a few days? Well, I think the timeline could be different. Yes, we could be talking a matter of months, maybe even a year or two. That's the only difference I have with von Mises. And actually, I'm going to show you why by a chart in a minute. But I think people are waking up because I follow this guy on X, Charlie Bilello. And who is he? Well, he's a very popular market strategist. He's got almost 700,000 followers on X. And he's usually quite mainstream, not out there like me or others, for example. But this is what he said, I think yesterday or the day before. The Fed's preferred measure of inflation has moved up to 2.9%. So it was yesterday. That number came out yesterday. The highest since February. Is that going to stop them from cutting interest rates next month? The market is saying no, with the probability of a cut still at 87%. The Fed has lost all credibility when it comes to fighting inflation. Quite amazing. Can you imagine when things are actually in a bad situation, when we actually have a crisis, like when we actually have a recession, when we actually have the stock market not at all-time highs but crashing, how much they'll need to cut? If they're cutting now when everything's fine, when the stock market market cap is over 200% of GDP, when yes, things are really bubbly, people are going to wake up now, and I think that's what's happened, and that's why gold and silver are starting to do really well, not just from yesterday, but from the beginning of the year. And unfortunately, for a lot of people, they are totally unaware of this. Some people are still investing in bonds, and how will bonds or treasuries do in a hyperinflation? Well, they could do okay nominally because the Fed is going to have to print trillions and trillions when we actually have signs of a crash or correction or recession. And they're going to use that, of course, to buy treasury bonds. But hard assets, especially gold and silver, are going to totally outperform. And they have already been outperforming, especially gold treasuries, for the last 25 years. So that's what's going to happen. And now I want to look at a couple of charts that I've shown you before. Maybe you haven't seen it if you're a new subscriber or new to the channel. And I've been comparing and looking at these charts for a while now. I think it was right after we broke out of this red line in the current in this gold chart of the United States paper dollars per 1 troy ounce of gold. And then we have this chart on the left. This is the value of 1 gold mark in paper marks back after World War I to the end of 1923, when the Reichsmark finally collapsed into a hyperinflation. So yeah, that number up there is like a trillion marks. So you can see that it started out, it was 1-to-1, of course, because 1 mark was 1 gold mark. And you can see that once it broke that 100 level, it just took off. It's a little bit like when the dollar broke, or gold broke the 2000 level, it just took off. And these are monthly charts, and they look very similar, which is really spooky. And it's why I think we're going to take off, and why there are a lot of people there. I would say 99% or 99.9% of the people out there in the investment world have no idea that we are in a hyperinflation. And granted, we might have a deflationary scare, and by that I mean a market crash, a recession, but you can bet the central bankers are not going to let that like linger for too long. They're going to throw the kitchen sink at it, and people are going to realize that, yes, inflation is a policy, and that they're never going to stop, and they're going to lose the confidence in the currency, and it's going to get even worse. So I said earlier that this currency collapse or hyperinflation will not last, will not happen in the next few weeks or days, even though I'm saying we are in it. And I think it's mainly because of the longevity of the current cycle. And there's something in technical analysis called fractals, which means you have same wave patterns, but they happen in different amplitudes, or they're different sizes. For example, you can see a little wave in the water, and then you can see big waves, and they look very similar but different sizes. So what I'm trying to say here, yes, the hyperinflationary collapse of the Reichsmark took place from 1918 to 1923, so about 5 years. Started, of course, with the outbreak of World War One. This one, as you can see, we could say that it started in the beginning of this century and will probably take maybe 30, 32 years. And I take that number because I've listened to Bert Doman, and he predicted back in the late 70s that gold was going to top in 1980 and then be in the bear market for 20 years. And then in the year 2000, we're going to be in the bull market for 32 years. So that's why I see this continuing. And it's going to be a wild and chaotic time. And very few people will understand what's going on. The symptoms or the consequence of all this is going to be that, people are going to be hard up. It's not going to be great. Yeah, of course, there is a danger of a war to try to take people's attention away from this, or to crack down on people, or to put controls. There's all that as well. And I said that hyperinflation is just not an economic thing. It's also social, political, and geopolitical situation. And we've got all the symptoms. They're truly chaotic. If you can't see that we have political disorder or chaos in the UK, US, Europe, and economic and social, then you're not really following things. And that's why I think all the symptoms are there for a currency collapse. It happened in post-World War I Germany. It was chaos politically, socially, economically. So we've got those symptoms. So let's look at some charts here. And we're going to start with the chart of gold. And that's the other thing I wanted to say. In a currency collapse, holding physical gold and silver is not for trading. And the worst thing you can do is think you're making money and exchange it for the collapsing currency. So unless you have an emergency and you have to exchange your gold and silver for the currency so you can react to your emergency, hold on to it. The most important thing in a hyperinflation is after the collapse, on the other side of it, is that you still have the gold and silver. And there's a good book called The Mandibles, which I highly recommend. I'm going to put a link to it in the description. And it's a fictional book, a really good novel by Lionel Shriver about a scenario like this happening in the United States. So, yeah, recommend that book. But anyway, we're going to look at the technicals because it's interesting. And right now, I guess the currency is melting down, and it's not just the dollar. If you look at all the other currencies, the gold price and all the other currencies, the same thing is happening. So no one's going to be immune. So I've got here 1,600 times 2 times 2, which is 6,400. What is this? Well, the Gnome of Zurich, he's into his numbers, Elliott wave, and very long-term charts. He thinks that the next target for gold is going to be 6,400. You can see that we broke this symmetrical triangle, which I've been following and talking about for a while. It looks like we've broken it definitively now. My target for that from the beginning of the year, when the trend, the accelerated trend started, my target is like 4,300. So it's lower than the Gnome of Zurich's target, but just thought you'd be interested in that. So I think what we're going to see now, the naysayers, of course, the people who don't understand gold, who haven't bought gold, they're going to be telling people that it's dangerous, that you shouldn't buy gold, it's too high. I would say don't listen to them. And I want to reiterate, this is all my opinion. I'm not giving financial advice here, but yeah, do what you need to do. And I wanted to show this other chart from Bob Coleman. He's like a bullion dealer. He thinks volatility is ready to take off, gold volatility. And in gold, it's the other way around. When volatility takes off, the price goes up. It's not like the stock market. So I thought that was interesting. So I've got another chart here. This is a long-term chart of silver versus the S&P index. And you can see that we're still nowhere near where silver could be relative to the S&P, of course. We're right at the bottom, and I've got a shorter term chart that shows that this bottom more concisely in the last few years. And yeah, I think silver is ready to take off. We closed above 39.50 yesterday in the spot price, which was the key resistance. Then I've got the same thing for gold. Gold to S&P 500 index ratio. And that also looks like it's right at the bottom. But if you magnify it, if you shrink the time period, you can see that we've just broken out of a falling wedge, which is really bullish. And in this case, bullish for gold versus the S&P. And you can see that we took off earlier this year in April when the stock market was dumping and gold was going up. There's a huge spike in this ratio. And then we've come back down and we actually retested the breakout level here. I put these little circles, which is very bullish as well, that we retested it and now it's bouncing back up. So that's that chart. There's something else that's happening that is even more chaotic politically and economically and financially, for not just for the United States but for the whole world. There's a judge that ruled that Donald Trump's tariffs are illegal. U.S. appeals court, but they've said that they're going to let the tariffs stay in place, but while President Trump takes this to the Supreme Court. So this is another symptom of the economic, political, and social and geopolitical chaos out there. Yes, make sure you share this video with as many people as possible. I think it's important that people wake up to what's happening. I'm not here to try to have a go or brag to people who are not in the precious metal sector. I'm here to try to help you protect your wealth or maybe even increase your wealth. And yes, if you could do that, help, share this. Maybe it will help a few friends and family who are totally unaware of what's going on. They might not really want to listen to it, but that's their prerogative. What about the miners? You might be asking about that. Well, we're going to look at the miners tomorrow on the live stream with Clive. They're looking really good as well. One thing I would say, a lot of you are probably sitting on some good profits in the gold and silver miners. In this hyperinflationary environment, what do you do if you want to take profit? Well, I think, you do take profit on miners, but make sure you don't hold that fiat profit for too long. Put it into physical or buy something worthwhile buying, a real asset that is useful, or pay off. Well, not even pay off debt. If you can finance your debt right now, you're fine. But anyway, We're going to cover the miners tomorrow. And with that, I'm going to wish you all a very good weekend. Take care. Bye.